Right now, somewhere in Australia, someone is about to hand the tax office a few $100s that was always meant to be theirs. They will do it without even noticing. They will log into myGov, click through the pre-filled boxes, hit submit, and feel a little rush of relief that it is finally done. And in that rush, they will leave money behind. Money that could have covered a week of groceries, money that could have knocked a chunk off a credit card, or started an emergency fund that finally gives them room to breathe. That does not have to be you this year. The 2025 to 26 financial year wrapped up on the 30th of June, so the window is open. And here is the first thing worth knowing. Lodging your return is not really the moment you win or lose. The real result is decided in the days before you touch that keyboard. It comes down to whether you gathered the right records and knew what you were actually allowed to claim. The lodging is just the final signature on a choice you already made. So let's slow down and get it right. The deadline to lodge your own return is the 31st of October 2026. That sounds far away, and it is. But the more important date is the one most people ignore. By now, in late July, most employers have already sent their final payroll data to the tax office. Once that lands, your income statement shows as tax ready inside myGov. Every single year, hundreds of thousands of people rush in on the very first day and lodge before that data arrives. Then they get caught in one of two traps. Either their numbers do not match and the return gets held up for a review, or they have to fix it later, which resets the whole clock and adds weeks to their refund. The smart move is almost too simple. Right now, in late July, the timing is on your side. Log in, check that every employer shows tax ready, and let the system fill in your income, your bank interest, your dividends, and your government payments for you. Once that data is sitting there confirmed, your job changes. It stops being data entry and becomes something far more valuable. Your job becomes finding every dollar you are legally owed. Before you claim a single thing, take 10 minutes to get organized. Open a folder on your phone or your computer and pull together everything in one place. Your receipts, your bank statements, your working from home log, any records of tools, courses, or gear you paid for during the year. When it all sits in front of you, the deductions you forgot about start jumping out. The tax office lets you lower your taxable income by claiming work-related expenses. And the golden rule is this: if you spent your own money on something tied directly to earning your income, you kept a record of it and your boss did not pay you back, then you can usually claim it. That covers more than people think: tools and gear for your trade, union fees and professional memberships, courses that link directly to your current job, a share of your phone and car use when it is truly for work, safety gear, and even some subscriptions if your role depends on them. But the biggest deduction for millions of Australians is working from home. And this is exactly where things go wrong. For the 2025 to 26 year, the fixed rate method lets you claim 70 cents for every hour you worked from home. That rate is higher than it used to be, and it is built to be an all-in-one figure. It bundles together your electricity, your gas, your internet, your home and mobile phone use, and your stationery. And here is the trap that catches thousands of returns every year. Because those costs are already baked into the 70 cents, you cannot then claim your phone bill or your internet bill separately on top. Do that, and you have claimed the same thing twice. The tax office watches this closer than almost anything else, and a return flagged for it can have the whole deduction stripped back. There is a second trap, and it is even more common. To use that fixed rate, you now need a record of the real hours you worked from home across the whole year. The old habit of guessing a number the night before, or scribbling a rough 4-week sample, no longer holds up. So if you have not been keeping one, that becomes your homework before you lodge. Go back through your calendar and your work patterns and rebuild your hours as honestly and accurately as you can. Now, the fixed rate is the simple path, and for most people, it is the right one, but it is not the only one. The actual cost method lets you claim the real work-related slice of every running expense. If you have high bills and a dedicated workspace, it can hand you a bigger deduction. It just asks for far more detailed records. The point is that you have a real choice, and the wrong one can cost you money. So run both in your head. See which one gives you more, then go with the winner. And here is something people miss even when they use the fixed rate. You can still claim, separately and on top, the drop in value of bigger items. Think of a laptop, a second monitor, or an office chair that cost more than a few $100s. There is one more thing worth checking. Look back at last year's return. It often holds clues about what you can claim again this year, from union fees to subscriptions to the same work expenses that come around every single year. Your past self left you a map, so use it. And do not forget the small stuff, because it adds up faster than you think. A $5 parking fee here, a phone charger for work there, a professional magazine, a set of safety glasses, a bag you use only for the job. On their own, they feel too tiny to bother with. Together across a whole year, they can lift your refund by a noticeable amount. Now let's talk about the mindset under all of this, because it matters more than any single deduction. A tax refund is not a gift. It is not the government being kind. It is your own money coming back to you because too much was taken from your pay across the year. Every hour you worked from home, every tool you bought, every course you paid for, that was your effort and your cash. Claiming it properly is not gaming the system. It is refusing to overpay for something you never owed. And once you see it that way, tax time stops feeling like a chore. It starts to feel like a chance to take back what is already yours. What you do with that refund is where the real change lives. A few hundred or a few $1,000s landing in your account is a rare moment of breathing room. And most people let it slip away on things they will not even remember in a month. Picture something different. Picture that refund becoming the first brick, the debt you finally start clearing, the buffer that means the next surprise bill does not send you spinning, the small investment that starts working while you sleep. That is how people who feel stuck begin to feel free, not through some huge windfall, but through one smart decision at a time. So here is your simple plan. Start by logging into myGov and checking that your income statement shows as tax ready. For most people watching now, it already will. Then, let the pre-fill do the heavy lifting on your income. Then, gather your receipts and records. Work out every work-related expense you are truly entitled to and pick the right method for your working from home hours. Double-check that you have not claimed anything twice that the fixed rate already covers. Make sure you have added your bigger equipment on top. Confirm your bank details are correct, because a wrong number is one of the most common reasons a refund gets held up. Then lodge online. In most cases, your money lands within about 2 weeks. One honest note before you go. Everyone's situation is different. If your return involves an investment property, a business, shares, crypto, or anything that makes your stomach tighten, it is truly worth speaking to a registered tax agent. Their fee is deductible next year, and the right advice can pay for itself many times over. There is no shame in getting help with something this important. This year, be the person who takes an extra hour, gathers the records, and claims every dollar that was always theirs. Because when you break it down, that single hour of care might turn out to be the highest paid hour you work all year. It can be the difference between a refund that vanishes and one that changes something real. If this helped clear the fog even a little, hit the like button, subscribe to the channel, and turn on notifications so you don't miss the next one. I'll see you there.